just before I came on today, I went back and looked at the 2015 to 18 bull market. We had 11 20% pullbacks or more. Many of them were 35, 38%. In the last cycle, from the 2020 low, not even the 2019 low, from the 2020 low, we had 8 corrections over 15%. Some happened in a day and some happened over 3 weeks. So it's normal. A lot of short-term traders in this space with a lot of capital, right? The main institutional capital in this space is actually trading firms. There's very few hedge funds and there's very few big institutions. So these guys see that massive build-up in leverage, they wait for something, and then they press it and everyone gets liquidated and they make a ton of money from it. It's classic kind of market maker price action. It would have happened on the New York Stock Exchange floor, happens in the futures exchanges, it happens always. But the issue is it doesn't even give you enough time to go and search the sofa for any spare change, rifling through your jean pockets, looking for any cash. It's all over and done with. And before you know it, as somebody was saying, I think it was OSF was saying, now it would be hilarious if they approved the ETF today. Another mantra that I have when you're in the middle of a bull market that has the macro behind it is it's all fucking noise. It's just noise. And so, has the main thesis changed? Is the work becoming less digital or more digital every day? More. Are investors who aren't exposed to it getting more interested in it? Yes. Is there capital flow coming in? Yes. Is the business cycle supportive? Are liquidity conditions supportive? Yes. In which everything else is noise. So it doesn't change anything. It actually gives it a higher probability of rising. And it gives it a higher probability of rising because you flushed out the leverage. If we'd gone in with such high funding, we'd have had to sell off after the event. Now we can have a rally and maybe a sideways consolidation before it actually goes live, right? So we've got announcement and then live date. And then the masses need to be mobilized. And so there's going to be waves of that happening. So my general mental model, it could be dead wrong, is we rally into it, rally after it, sideways consolidate for, a month while everybody starts launching this thing, the tickers come out, you can start trading it and the RAAs go around talking to their clients. And then by March, it all starts going batshit crazy. Rick Reeder did buy it. I think he used the futures contract. He bought it. He's their big risk taker. So we did see institutional adoption, but it was like early, the true pipes weren't there. And now it's all there and they've all done the work on it and they all understand it. So, we've seen the work that, you've had Sandy on from Franklin Templeton. We've seen, obviously the Fidelity team. These guys have been working throughout. People like Bitwise, Hunter Horsley, they've been out working all the way through the bear market, educating people, getting people in place, getting the right product, ramping up their teams. It's coming. That's pretty interesting to people. So now, are the institutions going to use the ETF? Mostly not. It's mostly the RAAs. It's really for individual investors. So those pools of capital and the individuals, it makes it just super easy because they can just use their brokerage app or they can use their RAA because then they can get fees on top. So they're incentivized to do it. Will some pension funds do it? Yes, but they still really don't know how to deal with this asset class yet. And they want more regulatory clarity. I mean, it helps with an ETF. So we will see it. One of the headlines that will come across the tape in 2024 is some monster pension fund has taken a monster-sized position in Bitcoin. It's not just Bill Miller and Texas Teachers. It'll be a bunch of others. We will see those headlines. They will be the pioneers to show the way to others that you could do it, much like Paul Tudor Jones was a pioneer in getting the hedge funds to start trading it because he was pretty early into getting on board with it. So yeah, my thesis remains unchanged. So I'm mainly denominated in Solana. Second is ETH. And like you, I think ETH has a big catch up as soon as this ETF is done. So that pause after the ETF is announced is, I think, the start of the ETH run. Because it's very simple. Let's say $1 billion of speculative capital went in to speculating on the Bitcoin ETF. Okay, once that news is out, you'll sell. Then what do? Oh, the ETH ETF, well, that's going to come by maybe June. So in which case that $1 billion goes into ETH. Now, what's interesting about ETH is it's a third of the size of Bitcoin currently. So if you put the same $1 billion into an asset that's a third of the size, it probably goes 3x more than Bitcoin did. And, ETH with the deflationary asset, the more activity, the less ETH there is around, and all of the staking means there's not a lot of liquid ETH around if this happens. So it could get very, very squeezy. So yeah, I think that. And maybe at some point it'll play a bit of catch up to Solana. I think Solana beats it all cycle, but there'll be legs when ETH does really well, much like Bitcoin started off out of the gates faster than anything. Then Solana caught up and exceeded it. I think ETH's chances next. I start up an asset management company called Exponential Age Asset Management, XPAM, that actually invests in, it's a fund of hedge funds, so invests in digital asset hedge funds, so they go out and do the work and do it because that's their job. I'm just not smart enough to find it. One thing I do know is some tokens with new charts will do well. Who's that going to be? Is that going to be, we've seen it with Bonk, could it be with any of the others, a whole bunch of these? The one thing that for everybody else to bear in mind is that these cycles tend to play out the same way. So it tends to start with crypto spring, is Bitcoin dense. We then start transitioning later spring, and it seems to be always DeFi season. I don't know why, but DeFi season starts taking off. Then you start hitting alt season when global liquidity starts increasing year on year. Alt season hits and ETH starts outperforming Bitcoin, and then you get some of these ridiculous tail events. Also, NFTs lag. So we're kind of like we were beginning of last year in crypto, where some of the NFTs have found a base and are rallying, others are still bleeding. Obviously, some of those will go to zero, obviously. But that NFT space, it really takes off when ETH goes to all-time highs. That's what happened last time around, and then it utterly explodes because everyone's got money to recycle. They buy trophy assets, everyone wants to buy a punk, and then off it goes again. So we've got that madness still to come. We've still got another leg, meme coin madness, dog coin madness comes later still. So that's in Q2 is kind of dog coin madness to come. So all of the psychology of the degens, that'll play out as normal, plus the sensible bets of the right layer ones. So here's my probability set. 60% chance it's a regular cycle, somewhat like the last cycle, but maybe a bit more like the previous cycle, that 2017. They got a little bit crazy. I think there's a 20% chance that maybe it all gets front loaded because we get all of the retail demand via the ETF, and it actually is a shorter cycle than expected. If you think the previous cycle was actually a bit stunted versus where people's expectations were, maybe this is stunted in terms of time. The other outcome I've got, the other 20% chance, is that this is a gigantic bubble cycle, somewhere between the 2012-13 version and the 2015, because everybody can now participate and total fucking madness ensues. And I don't know which one of those three it's going to be, but they've all got a decent chance. Because don't forget, if you think about, everybody was a little bit shocked that we didn't have a final leg last time around. So they now got that imprint, like they've all been waiting for the down 50% leg, the COVID leg, which is not going to happen again. So they're now all expecting that it to be a smaller cycle. And I always look for where can the crowd be wrong but still be right, which is like it's going up, but it goes up more.